Absolutely. Yeah, I think for through 2020, clearly the key opportunity is we still have the investment tax credit. So really through 2021, as long as you commence construction, you can get the 30% investment tax credit for your solar project. So that obviously allows us as an industry to offer lower PPA rates to customers as we're able to get that full tax credit value and access the tax equity market. It also creates a burning platform, if you will, for customers. So if you're trying to convince a customer to go solar, you can use the fact that the investment tax credit will be stepping down at the end of 2019 and then ultimately phasing out as a way to get them to commit to doing solar and allow you to develop the project in time. So I think that's really the big opportunity over the next few years, and the challenge is really just quickly developing projects to fit that timeline. I think it's, a lot of it, obviously, for the past decade or longer, has been about reducing costs and how much the costs of solar come down, which is incredibly important and will continue to be important. But in terms of individual players having success, I think it's really valuable for a solar company to figure out the right niche or market or even sub-market that it's can be successful in and take advantage of that. So costs are continuing to come down and continue to will do so over the next 3 years. But you still see lots of companies exiting the space, developers failing to be profitable, investors not able to put as much of their capital to use as they projected. And that's because it is a really competitive space. So I think it's key for players to figure out, hey, what are we good at and what are we going to concentrate on, and maybe run a few experiments. So pick a few state markets. Not all of them will work, but maybe a couple will. Maybe even we're going to really focus on schools and become good at creating solar education programs and building on school properties. So what are those very specific niches you want to focus on? And then once you find one that works, be able to take advantage of it, or else it's going to be difficult to achieve profitability in such a competitive market. I think they can expect to see developers looking for those types of capital, can expect to see a pretty robust market in terms of the investors and the capital available. I think on the sponsor equity side, there's clearly a lot of interest from pension funds to insurance companies to other types of funds or even larger strategic investors. There's a lot of appetite for owning solar projects, although I do think the type of sponsor equity you select is really important. And then on the construction piece, assuming you've got things set up, there are a lot of banks out there that will provide construction financing. Development capital is probably the most limited in terms of the number of active providers of the types of capital you mentioned. But I do think if you have a robust pipeline with a lot of different assets that you can essentially collateralize against each other, that there's a good number of development capital providers available as well. I think probably in terms of where to go, there's certainly the bank market is active and all the major U.S. financial institutions are active in this space. I think the most interesting thing is really who do you pick for the sponsor equity. So you're setting up a fund, obviously tax equity and debt is important, but I really think you should start with sourcing your sponsor equity, and you should look to find someone that's tax efficient so they can still value some of the depreciation losses they'll get from owning a solar project, and someone that can take a long-term view on electricity prices and even potential revenue from capacity associated with solar projects. So really spend your time finding that sponsor equity investor that is tax efficient and can value non-contracted revenue streams. And I think to find that, you should look at larger companies that have a history of owning long-term assets, be it electricity producing or other infrastructure type assets, and you can find that type of investor. And then once you have that sponsor that you know will then make your pricing competitive in the market, I think it becomes much easier to go just to the big banks, regional banks, just different types of lenders to source the construction permanent piece and the tax equity.